Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 28th of January 2016, presented by myself, Phil Carr, at the Gold and Silver Club. But guys, just a very quick check-in that everybody can see my presentation and you can also hear me loud and clear as well. As always, we'll be keeping it nice and interactive. If there are any questions or comments throughout the session, we will definitely be covering those. So just a quick check-in that everybody can hear me okay, and you can also see the presentation. So if you can let me know, that would be ideal. Fantastic. Okay, great. We shall get started. So we have lots to cover over today's session. So today we'll be reviewing the latest developments in the commodity markets. We'll be analysing the week's performance. The live session will be covering an overview of the commodity markets. We'll cover the top trades of the week. We'll also be, of course, covering live market commentary, technical analysis, answering any questions. As always, we'll keep it nice and interactive throughout the session. If you've got any questions at all on the commodity markets, do keep those coming through. So first of all, let me introduce you to the Gold and Silver Club. We are an international commodities trading research and advisory group. We specialize in the precious metals, the energies, and the agricultural markets. The Gold and Silver Club is recognized as a leading go-to authority on commodities, and as internationally respected experts, our analysis and opinions on the metals, the energies, and the agricultural markets are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNN, Global Banking and Finance Review, the Wall Street Journal, and our team of experts has advised and taught technical analysis, fundamental research, and portfolio management to more than 75,000 private traders worldwide. For more information on the Gold and Silver Club, please do visit our website, which is www.thegoldandsilverclub.com. Okay, fantastic. Right, so we shall have a look over at the gold price at the moment. We can see gold is currently trading at $1,118 US per ounce and 78 cents. So we'll take a look at that very shortly. We've had a lovely breakout on oil over the last couple of days, which we actually entered into live on our live trading room sessions yesterday, which I want to talk you through our position on oil right now and what we see over the next few weeks as well. So I will start off with oil. We'll move into the metals, then we'll move into the agricultural markets as well. First of all, I'll cover the top trades that we've had over the last week using the Gold and Silver Club signature trading strategies. So first of all, we've had a lovely buy position on oil, which broke out just last Friday. Good follow through. We've been anticipating this for a while. So those of you who've been following the Gold and Silver Club, we've been looking at a breakout towards the last week of January into February. I'll talk you through that for a number of reasons why we'd be looking into that for a breakout. We closed above a very key moving average yesterday, and I'll go through the additional factors into why we're looking for more upside here for oil. But essentially, we entered another position again yesterday, which is already up over 110 points. And this is Brent crude oil, the position that we took last week, which was a very quick day trade up to the next key resistance for 252 points profit. Gold, we had a lovely rally follow through over the course of this week up until the FOMC statement yesterday, which was a 260 point return there just for a nice quick breakout over 3 days. Nice three white soldiers formation on gold. And also we've had a good trade on corn, which we've now come out of that trade, which was a decent day trade, which developed after the USDA report earlier on in January. Took a few days to actually develop and fully hit our profit target, but a nice 120 point gain just there on corn as well. So those are some of the top trades we've had over the last week. Got a number of open positions at the moment too, which I want to talk you through. So first of all, we'll take a look. We'll move over to oil. I want to point out to you a few key factors on oil. So first of all, let me just show you the trade that we've got running on oil at the moment. So I'll just go through the entry, the specific details of that trade. So just bear with me as I share my screen. Okay, so this was taken just yesterday. Trade alert sent out to all of our traders. The entry there, 33.60 with take profit and so forth. You can see we've been forming a nice V-shaped reversal pattern. What we ideally wanted to see yesterday was a break and close above this resistance zone, and also a break and a close above the 21-day moving average, which is what we've got. And we've really started to pick up good momentum. So we're over 100 points in profit on this trade. If you go out to the higher time frames, which we'll do now, and you have a look at the weekly charts here, you've got a really nice basing formation at the moment on oil. We've come off the lows of $27 per barrel. We've got this nice V-shaped reversal pattern basing, and on the monthly chart, very clear rejection. So you really want to be able to go out much higher time frames here on oil just to see this nice rejection, which is forming off the lower ends of the trend channel at the moment. So we're getting this rotation higher right now. Now, it's always tricky, of course, to try and pick a bottom in any market, particularly oil, and there's been a lot of calls for a bottom on oil over November and over December and also into January as well. Now, one of the major reasons why we've been anticipating this move, and it's really very straightforward, comes down to seasonality. I will show you here very simply. This occurrence happens. You can go back to previous years, have a look at it for yourself. Each year we bottom out typically on oil over February. So this is a 5, 10 and 15-year seasonal study for oil, and you will see here where typically right the last week of, we saw exactly the same thing happen last January, right? In fact, it was Friday the 30th of January 2015. Look at oil, capitulated on that day and followed through for a 1,000-point rally after it had hit the lows for the year. Essentially, it broke down and had a super rally. I'll show you that in the technicals very shortly. So ultimately, we see this confluence each year over the month of February. We typically bottom out in January and we get a sustained rally over February. Now, this is 5, 10 and 15-year charts. I'll show you the 20 and 30-year seasonal studies for crude oil. You can see here where typically we bottom out again right at the end of January and we get this huge rally as we go into February. We've been anticipating this move for a while on oils. Those of you who've been following us for a while, again, we've been calling for a bottom to be put in on oil by the end of January. As we come into February, we're into this trade now. We've got a couple of positions running, one for a core position, one for a day trade, and you can see oil starting to build up momentum. Tomorrow will ultimately be the last day of January, and then we'll build into February, which is where we're anticipating a February rally. So yes, we are looking for a bottom and a base to be formed. I'm not saying it's the ultimate bottom for oil here. I'm saying that in the short term here, in terms of the cycles for oil, I would expect an upward cycle now over the coming weeks into February, following along with seasonality that we've seen in previous years. We've seen good short covering as well over, I mean, particularly Thursday and Friday, we saw a 13.5% breakout to the upside. So we've had a pretty significant move here. Also, what is of significance here is if you use some key moving averages on your chart, you can either utilize the 20 or the 21 MA. You'll note that oil follows this very well. If you go back to the breakdown that we've seen in price in oil going all the way back to the sell-off from July 2014, we remain below the 21-day moving average in terms of closes throughout that whole period of time, all the way down to the end of January. And funnily enough, we got exactly the same move last year. So if your only strategy for exit was to only get out of a sell short, if we break and close above the 21 MA from July through to January last year, you see you get to capitalize on this whole move to the downside there. So 21 MA, very powerful there on oil. So it's over a 6,000 point gain to the downside as it continued to break down. Once it broke and closed above it, yes, then we had over 1,000 point rally. And note the date of this. This is right at the end of January last year. We're seeing the exact same thing happen again this year. If you follow seasonality and you look at the gold market where you get the January effect, we've literally this year replicated what happened last year on gold with the rally that we've seen over the first week of the year and the follow through on gold where it's broken out to 12-week highs, which happens very common over January. And now you're getting into this seasonality play for February. So this time last year, we broke and closed above the 21 MA. Look where we are now. We're at that level now. On Thursday, we've broken and closed above the 21 MA. Yesterday, throughout this whole downward trend from November through to January, we remain below it. Now we're above it. Now, we don't just use this moving average. We use a lot of additional indicators, but this is the first signal. It's the first signal which is confirming our seasonal bias. So if you go out just to a more detailed chart here, you can see we're building up a nice little V-shaped reversal. I'm looking for good upside up to the next Fibonacci level above over the coming couple of weeks here. And as we move into February, then I want to see if we're really going to build a stronger base here. We're going to produce a double bottom, and if we're going to get a strong move to the upside. Now, it's important to note, up until this point, we have been selling into every single rally. So throughout, from the OPEC meeting in December, prior to that in November, we've been selling every single rally. We've been on the sell short side. Of said that also during our live sessions as well. We're selling short, selling into rallies. Now we're not. We're not looking to sell into any rallies now. With oil, we're only buying oil at the moment. We're looking for good follow through over this month, over February. I'm targeting, there's a lot of clean air ahead here for a potential breakout. Now, it won't obviously just move up in one straight line here on oil. It will break out to the upside. It will ebb and flow. We'll get pullbacks. We'll get higher swing lows, higher swing highs, in my opinion. But ultimately, it's got the first level of confirmation. So at the moment, that is our opposition on oil. And that is the trade that we've currently got running right now. Right, okay, so gold sitting, so we can, FX Gal, we can move over and we can have a, thank you Adinda, we can certainly have a look at gold. So this is oil, and just covering that off, so that is Brent crude oil. I can come back to light sweet crude oil and so forth very shortly. So if we go over, I can certainly go over to gold and we'll have a look at that in more detail. So gold right now, you're absolutely right, FX Gal, in terms of sitting under the 200-day moving average at the moment. So we just go over, you can see that we've come up to resistance. So essentially, if you want a really quick way to be able to see where the trend channels are, put your chart into a line chart, look at the closes. You can see here, very straightforward on gold. In fact, let me bring out pretty much a raw chart here for you. You can have a look at that really easily. So just put your chart into a line chart, go and draw the swing highs. There you go. So you can see the closes, and essentially gold's come right up to that level. Now the line chart gives you the closes. Obviously candlesticks is more powerful in terms of having actual trade setups from that, but the line chart will give you the closes, and you can see there essentially we've come up to resistance, just shy of the 200-day moving average, as you point out, FX Gal, and this is where we've come into resistance. There's a Fibonacci level which is supporting the price around the 118 level at the moment. What I'm looking at today is the US dollar index, and I want to see whether that will break down or hold support. The US dollar index, it's starting to curl and get back below some key moving averages, but it is in decision mode. So far, the US dollar since December has held on to this very key underlying trend channel. If it breaks and closes below that level, which will be a break and close below several key moving averages, including the 50 MA, the 21 MA, there's quite a lot of clean air for it to break down and then provide support to the metals. What I found really interesting earlier on is that we've been looking at silver very closely. Look at this move on silver today. It had a shocking sell-off, really quick sell-off a little bit earlier on today, about an hour and a half, about an hour ago actually, and very quickly it's been bought back up. Immediately it's been bought back up. You've got a nice hammer forming. There's a lot of buyers getting into silver. We're looking at the CFTC reports from last Friday. We've seen that the biggest number of buy positions have been added to silver and gold since November last year. So you can see pullbacks have been treated as buying opportunities. Silver's price structure at the moment, it is now building a base above some key moving averages. The 50 MA, you can see in particular here, broken close above that level, which is important for silver. The next real key level of resistance to get above is 1464. It's been channeling over the last 3 months here, but if we get a break and a close above that zone, we could also shoot towards a 200 MA, just like gold has done. You can see silver has been bid as soon as it pulled back today. A lot of trades have been automatically triggered around the 21 MA and the 50 MA here, and you've seen a nice little dragonfly doji developing on the daily. So silver, pay attention to silver for sure. Platinum is also worth having on your radar. So platinum has been leading this move with the metal so far. It is getting overextended to the buy side at the moment, so I am keeping an eye as to how high we'll actually come here, platinum, whether we'll just find overhead resistance around 896 above. But you can see this V-shaped reversal pattern is starting to play out here with platinum, but I want to see whether it will follow through. So for me, we'll definitely be watching the precious metals today very closely, and also the US dollar index will be very important to see how this closes. So a break and a close below this supportive trend channel, that will provide support here for the metals. Obviously, if it holds this level and continues to rally, that will provide some weakness. Now, what I would say on the metals right now, I am looking for a cycle lower at the moment for gold. I think it's getting quite overextended to the buy side right now. I'm looking for just a typical cycle lower. You can see where normally you can actually, let me just show you the cycles here. You've got equidistant movements between the swing lows, the swing high, swing low, swing high. We're getting to a point of being overextended on gold at the moment. It might be able to put in one more leg for a breakout before it does pull back again, possibly coming up to 200 MA and just above that zone, which is sitting around 1130. I'd say between the 200 MA, which is 1131, up to 1135, and then you're really coming into some significant resistance where gold really needs to either consolidate or pull back. It is getting to a point here here, where it's overdue a cycle pullback again, back towards the lower end of this trend channel, certainly back towards previous resistance, which turns support, which is sitting between 1106 to 1112 here. So gold, watching very carefully. It's getting a little bit overextended. We've trailed our stop losses up on the trades which have been in since the first week of January here as well, just allowing it a little bit more room to breathe, just in case it's got the legs here to get above the 200 MA and just put another gasp of a breakout here just before it then pulls back again. Gold paying a lot of attention to at the moment though, and the inverse correlation with also the US dollar index. If we move it over to silver, I do actually like the price structure of silver here for a re-entry based on this pullback here. It's looking good. You can see where it broke out of this pennant formation. Actually, it's come right back. The buy orders have been triggered at the 50 MA, and it's come back very strong here, which is a good sign for silver, for the silver bulls here, if they're looking to get into positions or add to positions. Obviously, orders have been filled on this pullback. It's been quite significant and abrupt pullback here, but if you weren't caught in that, it offered an opportunity to get in for a nice re-entry at a better price. And then I see really silver watching this very carefully across multiple timeframes. On the weekly, it broke through overhead resistance. It's also starting to break through this overhead resistance as well, above, sitting around 1435. If it breaks and closes above this zone of resistance, it's got the potential for good follow through. So silver, for me, one to watch, could be a nice breakout trade over the next couple of weeks. Now, what else do you need to have on your calendar as we head into February? You want the Chinese Lunar New Year on your calendar, so that will be approaching on the 7th of February. So typically what you tend to see is strength continue with the precious metals, particularly gold, right up to the Chinese New Year, where gold is gifted, and we often see a lot more purchasing and importing of gold right up until the 7th of February. So that's only about a week and a half away now. We're just over a week away. In terms of trading days, it's about 6 trading days away, or 6.5 including today. So you've got about another week and a half more of potential upside here for the metals before China will then be away for at least a week. You have bank holiday over that period of the 8th, 9th, 10th, 11th and 12th, and that is where you don't see any overnight support for the precious metals. So they either consolidate or they start to turn lower due to no real demand, no real support for the metals overnight. So it's something just to bear in mind also. Okay, excellent. So Ali, we can take a look at that. If we're still running at half one as well, we can have a look at the impact on the US dollar index. You'll see that inverse correlation. You're just asking about the euro US dollar. Essentially, you will see an inverse correlation with the US dollar there. So obviously, if the numbers come out for durable index, if they're positive for the US economy, you'll see the US dollar index find support and it will rally, and inversely, the euro will sell off, and vice versa. If it's weak numbers come out, that will provide potential for the US dollar to break down, and inversely that will be supportive for the euro US dollar. I can just show you very quickly. I can just have a look. You can just show you this inverse correlation real quick, just to go over this question. We look at the correlations. We're not trading this directly, but you can look at the correlations because all markets are interconnected here. So I can just show you very quickly, just in relation to the US dollar question there and euro US dollar. Have a look at this, right? So all you need to do is just overlay the euro US dollar, put it next to the dollar index, and you will see the inverse correlations between the two. They will move inversely to each other. So you want to watch the US dollar. Whenever you're trading Forex, you always must pay attention to the US dollar index. So you'll see this opposite move. You've got an inverse hammer on the US dollar index, and you've got the opposite is true for the euro US dollar. They move the opposite direction. So you don't want to be shorting the US dollar and long the euro US dollar, because that is or shorting the US dollar index and going long euro US dollar, because that is essentially the same trade. So have a look at this. This is a V-shaped reversal pattern that you've got on the euro US dollar, which looks like it's getting ready. Potentially it could break out and follow through. On the opposite direction, you've got a inverse hammer and also a bearish V-shaped reversal pattern formation on the US dollar index. Okay, so if that breaks support, you'll see it break down to the next key support below, and you'll see the euro will shoot up towards its resistance zone if we get a significant move on that at 1:30 London time. Okay, brilliant. Right, so I will just, Mauricio, I think that question is directed to you. So I've gone over it a little bit, but obviously feel free to put your own thoughts into that. So I hope that's helped a little bit for you, Ali, too. Okay, fantastic. Right, so we'll just go over to Now we'll go over to the other precious metals. So I just want to go over now to platinum and palladium. And so I'll show you first of all, so we just showed you platinum. So this is the overall move that we're seeing in platinum at the moment, potentially building a good base. On the weekly chart, pretty decent move, right? We've got a indecision candle last week, a doji right at key support. So no, although we broke down on the daily chart, we didn't break and close below key support on the weekly. The weekly held, and then the weekly charts had a nice pop to the upside, could get follow through. So I'm watching that. Palladium also indecision mode, sitting right at the 21 MA. There is the potential for palladium to build a bit of a base here. Again, on the higher time frames, you can see here, nice rejection candle a couple of weeks back, could get some follow through here. So again, just waiting to see how palladium closes out the week at the moment. Now I'll just move it over and we'll have a look also at coffee and also the other grains. So just want to point out coffee at the moment. So coffee, we've been in this position now, coffee just over a week or so. So again, I can just show you the overall setup that we've got running on coffee right now. So let me bring that out to you. So coffee, we've entered into this trade at 11.16. You can see current price 11.1760. We've got a nice area. We're looking to target the upper end of this trend line at 11.23. It's given a couple of opportunities to get in over the last week. I like this based on higher time frames as well. You can have a look at the weekly, nice little pop towards the upside. The daily, nice V-shaped reversal pattern. And also, if I just bring you over to coffee on the much higher time frames here, have a look at coffee on the monthly chart. Lovely bit of support on the chart going all the way back to 2002. Found support, a bounce off that in 2014 and more recently again. So structurally on the higher time frames, it looks good for a rotation higher. The weekly chart also giving us that confirmation, and the daily chart, nice little V-shaped reversal pattern. I'm looking for follow through back up to the upper end of the trend channel, targeting circa 11.23. So I do like coffee at the moment for more upside in order to trade the next breakout here. So coffee, currently we've got our position on coffee right now long. Moving over to the grains, do keep an eye also on wheat. Let me bring that out actually again to a higher time frame chart. We'll just go over to wheat and also corn as well. So if you have a look at wheat, what you want to bear in mind is wheat on the higher time frames. We've come off of a major level of support around 460. We've had good rejection at that level. I do see this as a longer term trade to take it up to $5.30 a bushel. So wheat for me right now, still putting in quite a strong candle on the monthly. Now, bear in mind, tomorrow is the last trading day of January, and with that you can then start to look, if you do higher time frame analysis, you can look at how all the monthly charts close, which will help you if you are a longer term core position trader and you trade off the higher time frames. It's always good to go into higher time frames anyway, whatever the market you're trading, just to give you the right side of the trend when you are trading. Now, if you have a look at the overall price structure on the daily here, you see we're retesting the lower end of the trend channel. So looking really to see how this is going to close over the course of today. So far, we've been holding around the lower end of this zone. But again, if it comes back to support, we'll look for rejection and opportunities to get additional trades at key support here as well. So that will be quite important for our wheat longs here. We'll look for potential re-entries at the lower end of this support zone. Now, we mentioned earlier on, we've taken profits on our corn trade. Corn on the monthly chart, it's looking pretty strong here as well. You can see where we've got a nice level of support on the monthly, sitting around 345. Nice rejection candle. On the weekly, we've had good follow through when we came down to $3.50 a bushel there, and you can see we've had a nice little break and follow through to the upside. So we've come out of our day trade there. We've got the wheat trades running as well at the moment. There is the potential to just get a rally up to the 380 zone above. In terms of the top opportunities that I see right now, I definitely would keep an eye on oil. Oil's now had that definitive close above the 21 MA. As I mentioned, I'll just go back out to Brent and just show you that the position that we've got at the moment. So you can see we've got a nice little bit of follow through, 34.60. So we're currently in our fresh trade that we took yesterday after the FOMC statement. We're currently over 100 points in profit on that entry. So that is moving really nicely right now. In fact, let me see if I can bring that up. Let's have a look. Now I'll bring it up on another chart, another screen. Don't want to get too many charts on your screen at the moment, but we've essentially got a nice fresh entry on that at 33.60, and we've just broken through 34 and 67, so up over about 100 points on that trade at the moment. Looking for good follow through. As I mentioned, there's a fair amount of clean air above for crude oil just at the moment. Right, we'll move it over. The other market I want to show you is natural gas, which I think will be of interest. This overall rejection candle, which we're forming at the moment on natural gas, just towards the upper end of, for me, this trend channel. For me, this looks like a potential bear flag setting up as well. And again, I'll just go over to seasonality charts. You can see typically natural gas over the first quarter is bearish. So you do tend to see over the month of January and February, natural gas has more bearish seasonality over 5, 10 and 15-year charts. And we're looking to take advantage of more downside here. So if you go out to higher time frames as well, such as the weekly here, in fact, let me bring that out again. Sorry to keep flipping between charts here, but I just wanted to show you the longer term charts versus the day trade charts here as well. Okay, so yeah, this is the point I wanted to show you. On natural gas, you can see very clearly on the monthly chart, we've encountered overhead resistance. And just on the weekly chart, you see a nice little inverse hammer developing as well. We've come off the upper end of a resistance channel, one of our indicators as well, which is showing that we've come into overbought territory. And we see the potential for natural gas to break down back towards the lower end of this swing low and potentially taking it out for a dead cat bounce if it takes out 1.712. What's been surprising is natural gas hasn't really had much of a breakout considering the storms that we've had in the US, and we haven't really seen too much demand. There was a little pop towards the end of last week, but it didn't really follow through much. You've got a lot of rejection candles overhead here, and I see we've got natural gas storage inventories coming up later on today, which will be in 2 hours time. And what I'm looking at for here is a potential opportunity to enter short for a breakdown. You can see that. See how today's candle pans out. There is a potential if we do break support here and the previous swing low to the left of the chart to just take that down. You can see 1 to 1, 2 to 1, 3 to 1. So we're looking at a potential entry later on today into the close or as we head into next week on natural gas if it does get a confirmed breakdown in price. So natural gas for me is definitely also a market that you want to have on your radar. So currently, yeah, oil's moving well. I trades on oil. Coffee, we've got a position on coffee as well. Look at wheat for a potential retest of the lower end of its support zone for a buying opportunity. We'll move it back to the US dollar index very shortly. We've got some news coming up on that. In fact, let me just bring it out to the US dollar now. And I can just, whilst we're looking at that, I might be quiet just for a minute here as we have a look. Again, I'm not looking to trade the euro directly here. I'm just answering a question on that. Thank you for that question there, Ali. So we can just have a look at that. We'll have a look at gold in a second as well. Just want to show you for the inverse correlation so you can have a look. You've got the US dollar on the left and you have the euro on the right. And we'll just bring up the news. So I'll just be quiet for about another 30 seconds as I bring this up. Bear with me. Okay, so we've got coming up in the next minute, we've got core durable goods orders coming up, initial jobless claims as well. Yep, so we should get some volatility in the next 1 minute or so. See if those numbers, how they come out. This will affect gold, of course, as well. Inversely, see if we can bring gold out too. Oh, there we go. So you can see euro US dollar is off at the moment, already starting to break out, and you're getting that inverse correlation. I'll just bring out gold here to the chart as well. There's gold. Bring that out on the daily. Okay, gold not getting too much of a move. Right, let's see what those numbers are. Okay, so we can expect a number on the core durable goods orders. Initial jobless claims, 278 versus 282. Not too much difference on that, but it's the core durable goods orders which have come in weaker than expected. So this is important because of this trend channel at the moment on the dollar index. If that breaks down, we're at a key juncture here with this trend channel. You can see the euro is getting a nice little lift off that. Actually, it's starting to break out this reversal pattern. You've got a V-shaped reversal pattern for a breakout. Relative amount of clean air actually on euro to get up back up to resistance. It's sitting around 1.097. Yeah, exactly, Joe. Yeah, euro USD breaking out. I want to see if this follows through on the US dollar index to the left there. You see gold will go up as well as a result. Now, you want to note that the US dollar index needs to really break yesterday's low and follow through as well. It tends to be the master of coming down to support and then just turning around and getting supported with a hammer candle into the close there. It's done that quite a few times. However, it's sitting right at a number of key levels there. You're below several of the key moving averages that we use, but in particular, the 50 and the 21 are made quite important. You want to see if this will follow through. So far, US dollar index not really following through for a sell. So the euro on the right is struggling with that because the US dollar is not fully breaking down. If the US dollar fully broke down and broke below this layer of support lower, it would give the euro what it needs in order to break out. Okay, so it's really a break below yesterday's low there, 98.71 zone. So we continue to monitor that, see if the euro can do it. We'll have a look at the weekly as well for euro. Yeah, structurally, you've got very key resistance above 1.097. Also, it's just ranging still, the euro. See if we get some follow through here. It will struggle whilst the US dollar index on the left holds that support. Euro will struggle to follow through. But if it does break support on the US dollar, you will see euro breakout. Yeah, that does seem to be the case there. Gorilla. Initial knee-jerk reactions, yep, USD negative, potential fake out. Yeah, to be decided. That was the knee-jerk reaction. Now I want to see if there's follow-through. So typically you get the knee-jerk reaction, then you want to see if there's follow-through. Essentially, for follow-through for me here, the US dollar index needs to take out that supportive layer 98.71. Euro is starting to breach above the last 5 days worth of highs. So the euro is looking pretty strong here. Could see it coming up, shooting up to 1.09732 above. Yeah, it's not a huge move so far, but if the US dollar comes back down for a break of 98.71, you'll see that follow through with the euro strength. So the initial knee-jerk reaction is over. Now you want to see if you get the follow through. It's quite interesting, so we can keep it on this for now. Just see what move that we get. See if we get some follow through here with the euro. There you go, US dollar coming down. If it retests and breaks support, then it's on. Yeah, US dollar note on the left there, it's starting to come down for a breakdown. You can see, oh, actually, euro US dollar breaking a pivot now. Relative amount of clean air up to, you got key resistance there, seen around 1.097 up to the 100 MA just above. Just bring out gold there in the middle as well. Yeah, gold getting a bit of a bounce off that too. Gold holding on to some 4-hour channels at the moment, actually. We'll bring that on a different chart, though. I'll just keep it on the daily for now. So essentially, at the moment, with the US dollar index, we're looking for a break here of 98.71. So if you can break below that level, we should start to build up momentum to the downside, essentially taking out yesterday's low. Then you've got a lower high, lower low, and you start to build up momentum below these key moving averages. Yeah, FX Gal, no problem. I would say to be decided by this afternoon here. That trend channel is really important for the US dollar index. So it's maintained that channel going back to the beginning. Let's have a look how far. I think it was end of November, beginning of December. Yeah, it was from the beginning of December. That trend channel has been maintained, and US dollar has continued to keep closing above the key moving averages there, 21 MA, 50 MA, the upper end of this trend channel. But it's getting to a point you can see that inverse V-shaped reversal pattern you've got on both. Normally, if you're going to see good follow through and a trend reversal, an FOMC statement is a good time for that to happen. After an FOMC statement, the US dollar has been holding on to key support throughout the whole month, but yesterday's statement, you've seen this starting to follow through. After the statement yesterday, we did see weakness in the US dollar. We saw initial weakness, we then got bought into the close, and we saw a relatively strong close in it back above that key trend line. But now if it retests it and breaks through support, then that will lend support to certainly the euro US dollar. Yeah, also I'd definitely keep an eye on silver. So as you mentioned before, silver is looking quite interesting now. The rejection that we got today, and it's really starting to build quite a strong base at the moment, particularly if the US dollar breaks down. The gold market is getting a bit overextended. We've been taking advantage of these breakouts throughout this whole move, but you've had quite a nice pullback on silver today. It's quite significant. Day-to-day movements on silver tend to be in the range of around 40 points per day for a maximum. So a move like this that we've seen today from the high of 14, about let's just double check that actually, see what the high was, 1453 down to low of 1407. Yeah, that's your normal day-to-day volatility. But if it does close the day with a nice strong rejection candle today and we see the US dollar break down, there'll be an opportunity for a breakout trade on silver in the coming days for a break above the highs. Excellent. Right, just coming back to, yeah, just regarding our open positions at the moment that we've been going through, and yeah, I was just talking about Brent crude oil a little bit earlier on. So yeah, I'll show you, I'll bring out Brent again just to show you for those who've just joined us a little bit later in the session there. So you've got Brent crude oil, nice breakout above 33.60. So essentially, this is, hold on, let me bring it out. Okay, so yeah, this is the position that we've taken just yesterday, sent out to all of our traders. So that's currently over roughly about 100 points in profit at the moment from Brent crude oil breakout trade yesterday. In terms of actually getting how you can get access to our trades where we provide the exact entry, exit, take profit levels that we're taking, any adjustment to those trades, all you need to do is just go over here to www.theprivatetradersclub.com. So from there, it would just detail out what we provide there. So we do, yeah, absolutely. We provide live trade setups. So for all of our traders, we provide the setups of each trade that we're taking. That gets emailed out real time. And then once it's been triggered, you get an email alert real time. That includes a take profit, stop loss, the entry on all of the trades that we're taking, additional trade management, whether that be trailing up stop losses, extending our take profits on swing trades. All of those are updated. You can also log into our membership site to go over and look at all the trades in more detail and the commentary which goes along with that. So you can gain access to that www.theprivatetradersclub.com. Alongside that, we also include you can join all of our live trading rooms. We trade news live, such as the FOMC statement yesterday. We traded live with all of our traders, took the Brent crude oil trade, which is currently just trading around 100 points in profit. We took that yesterday, and you can get access to all of our live trades throughout the live trading rooms, and you can come on those sessions. They also get recorded. You can rewatch the recordings. That's all available as part of your membership as well. And you also get access to our trading course. That's an online trading course. You can go through step by step, module by module. All of our strategies are on there, how to set up your chart templates or the indicators that we use at the Gold and Silver Club. You also get access to all of the risk management, the compounding calculators that we utilize. You get access to news trading strategies, swing trading strategies, how to modify your trades, how to trail your stop losses. Everything is on there. It's very comprehensive. So that's the Master the Markets trading course. So you get access to our online course. And you also get the week ahead trading plan. So every single weekend we provide a week ahead trading plan for all of our traders, so they know the exact trade opportunities that are coming up, the major seasonal plays, the major trading opportunities for the next week. And we also go over all of our open positions. All you need to do if you'd like to really take your trading to the next level and do that, again, just go to www.theprivatetradersclub.com. Again, www.theprivatetradersclub.com. Go to enroll here now. Once you go there, you'll just have an application form. Just complete all of the fields. Make sure each form is completed. Just click apply now, and a member of our team will get in touch with you ASAP. Okay, so that is how you get access to all of the trades that we are taking throughout the week, and all of the trade management of those trades as well. Okay, fantastic. If there's any questions on those, I will certainly go through it. I'm just going to bring out, I want to just show you, we'll bring you back to the US dollar index there. We're just seeing a little bit of a breakdown in price now at the moment. Hold on, which chart were we on? US dollar, let's bring that back out. Yeah, there we go. We're starting to get there. You're starting to get that break below the previous day's low there with the US dollar. So you can see with that, we're starting to see a bit of a pop with the euro. Gorilla, potentially, yes, it is. I mean, at the moment, you could. So the question is it possible to copy the trades instead of getting the alerts by email there? You've got the potential to do that. The way that we structure that is we provide the exact setup with all the criteria of the entry, the exit, the take profit. Those are always set ahead. Those are sent ahead of time, ahead of the trade actually triggering. So you've got time to put on the order, to put it on your platform. You can set up alerts for that as well. You can set up email alerts, mobile notifications as well. So all of that can be done for you in that way. So it makes it very automated. Fantastic. So we'll just keep an eye at the moment. Again, I do want to keep your attention on silver as well. I would suggest today by the close that the potentially, or even this afternoon, we'll get a nice opportunity for a breakout trade on if we see the metals holding onto key levels. I really like the price structure of silver right now. It's such strong rejection from the 50 MA zone and the lower end of this channel. So silver I would definitely be keeping an eye on into tomorrow and into next week as well. It's building up a really strong base at the moment. I'd like to see how it closes the weekly and the monthly, but it's looking really strong. And again, for those just joining us in the latter part of the session, we did say also we'd go over light sweet crude oil. I see the same thing happening. Light sweet crude oil is lagging slightly behind Brent crude oil, but it's got that all-important break above the 21 MA at the moment. You can see that overhead, very important. You can see throughout this whole downward trend, we maintain below the 21 MA. Today's break, if it closes above that level, it will start basing as well. You form this V-shaped reversal pattern, and you've got clean air up to the 50 MA above. So it won't happen, of course, just in one day, but it will happen, I would suggest, over the progression into February. Next week will be into February, and this is typically where you start to see this nice basing formation. Brent is leading the rally at the moment, so we got into Brent first, but I see light sweet crude oil following suit as well next. Gorilla, yeah, absolutely. So the US dollar trading below yesterday's low, definitely, yeah, it's under pressure at the moment. So it's looking good actually for the US dollar to actually currently anyway to get a bearish close today. That will be an important day for the US dollar if we do get a break. You can see it's starting to break support here. You can see our trend channels here very clearly starting to get a break and below yesterday's low already. If it follows through and it continues to sell off, that would definitely support, for example, the euro. It will also support gold, silver, the other commodities. It will provide support to those to rally. Obviously, gold, silver, the way we trade it, it's priced in dollars. So you're trading essentially XAU US dollar, you're trading gold against the US dollar. Therefore, same with silver, XAG USD. So therefore, when you're trading these markets, they will move inversely to the US dollar index. As the US dollar sells off, they will provide support for the metals. I'll just have a quick overview. Let's have a look to see if there's anything else which is worth just bringing to your attention at the moment. Now, again, I would just see, looking over all of my monitors, I would suggest at the moment, as I mentioned at the start, the real key opportunities I see right now, Brent crude oil, which we've got core position and also a day trade position. The day trade position activated yesterday, so we've got those trades on. WTI I see following through next. Light sweet crude oil, coffee as well. Got a nice position on coffee. I see more upside with coffee over the course of the next week. I would keep an eye into this afternoon on certainly the US dollar for a bearish close and the inverse correlation with gold and silver. Silver at the moment I would suggest has more potential upside because gold is already quite extended. Silver is lagging behind a bit, but I see those as some of the key trade opportunities at the moment. Right, going back to Gorilla, your question, a daily close, a weekly negative close, yeah, on the US dollar index supports thesis for more bearish next month. It does indeed, hence crude up. Yep. Yes, it does. I mean, to some degree, yeah, I would agree with that analysis, Gorilla. You can go into that. We would simplify it by saying that obviously it simplifies it, but in essence, yes, that's correct. No, that's absolutely fine. I mean, sometimes trading can be overcomplicated. At its simplest level, yes. This is a potential turning point for the US dollar, as coming off the back of the FOMC statement. In the short term, anyway, we're starting to turn. It's going through a cycle where it could just go lower here, breaking this support. It got a fair amount of clean air and come back. I mean, if we take off trend channels here, we just look at this purely in the context of horizontal resistance and horizontal support. You've got the potential here. If we zoom out on the chart as well, you can see where there was a fair amount of resistance previously, turn support around the 97.25 zone. You've had what could be described as a bear flag formation. That swing high never got above the previous swing high. You can see you've got this bit of a bear flag developing where if we take out the low here, we start to come back down again. We could get a rotation back towards the 97.25 zone. We'll also look at that. Just go out to the weekly chart. You can also see the potential for a bear flag formation there as well at the moment. It's not confirmed yet. It's not confirmed. So it's developing at the moment, but I could see that potential rotation lower in the short term. Today will be the first day that we could get that negative close below the 21 MA and the 50 MA, which would indicate short-term momentum to the downside. Oil, there are other factors at play here with oil at the moment as well for a rally. We've been anticipating for this for a while. Seasonal factors very strong this time of year. Fantastic. Yep. Thanks, Gorilla. I think we've answered all the questions on that. So what I'll do, I will just bring you back out to the main presentation here. And again, we'll just show you the season. That was the seasonality chart we referred to on oil earlier. For those of you who joined a bit later in the session, where you typically see this really good follow through over the month of February. February is one of the strongest months of the year for oil. Yeah, absolutely, Grilla. No, that's perfect. No problem. Yep, great. Okay, fantastic. So, yeah, as I mentioned earlier, guys, if you would like to gain access to our live trade setups throughout the week, our live trading rooms, the week ahead wealth plan, our email support as well, you get supported, whether that be on the strategies, your entries, exits, take profits, any questions at all as they relate to the markets that we're trading. You also got access to the email support line. To gain access to the Private Traders Club, very simply, just go across to www.theprivatetraders.club.com for your enrollment. So once you've gone onto www.theprivatetraders.club.com, you fill out the application form. It will take you less than 60 seconds. Membership is by application only, but once that is formed, a member of our team will get in touch with you ASAP about how to move forward with your membership. Okay. Thank you. Fantastic. So that's a wrap for today's session, guys. Thank you very much for all the comments and the interaction for today's session. It's been another good one. And we'll catch you guys all on the next one. Wish you profitable trading. And I really look forward to working with those of you who will be making the application to the Private Traders Club and to really help you take your trading to the next level. Okay, fantastic. Take care, guys. We'll see you all on the next one. Thank you, Dinda and Mauricio, for hosting today's session. And we'll see you real soon, guys. Thank you. Take care. Bye-bye. Thanks, Dinda. Cheers. Bye-bye.